Hello, everyone. After in-depth panel discussions on iron ore, steel, and ferroalloys since last couple of days, I welcome you all to yet another insightful day of Steelman's Engage 5.0, the Virtual Connect webinar series. Our topic for today's discussion is factors to drive global steel markets in the near term. I am Nishtha Mukherjee, General Manager at Steelmint, and I have with me Ms. Sakina Rizvi, Senior Associate at Steelmint, who will be co-hosting this webinar with me. Welcome, Sakina.
Thank you, ma'am.
Well, we also have with us two industry experts who will be sharing their views on the topic today. Our first panelist is Mr. Anuj Mahajan, Director, FE Metals PT Limited from Singapore. Welcome, sir.
Hi, Shinishta.
Our second panelist is Ms. Lynn Mao, Senior Steel Analyst, MySteel. Welcome, ma'am.
Hi, everyone. Thank you for joining us.
Thank you. The year 2023 has been eventful for the global steel market. Significant increase in Chinese steel exports, devastating earthquakes hitting Turkey, CBAM entering into a transitional phase in EU, and of course the overcapacity issues in ASEAN were some of the key events that impacted the global steel markets in 2023. I now invite Sakina to give a brief overview of the changing trade patterns and global steel prices in 2023. Over to you, Sakina.
Thank you, ma'am. Good morning, ladies and gentlemen. I am here to give a brief about global steel market. Before moving ahead with the presentation, let me give you a brief overview of Steelmint. With over 600 price assessments and 500 data sets, Steelmint has emerged as a leading market intelligence firm over the last decade. So coming to my presentation, after performing poor last year, the global seaborne trade, steel export trade has looked up so far in 2023. The top 16 steel exporters, representing around 80 to 85% of total seaborne trade, saw a 3% increase in their exports compared to the same period last year. This translates to a total of 195 million tons shipped in 2023 compared to 189 million tons in 22. Among the leading players, China put up the best show compared to the rest. Of the 16 countries tracked, 9 were in the red, but the overall volumes remained in positive zone because of China's share. India, unfortunately, fell from its 6th position last year to 10th this year. Coming to China market, having largest share in global steel exports, the dragon country was perhaps conspicuous in showing a 32% year-on-year increase in steel exports to nearly 68 million tons in this time frame under review, against 51 million tons seen in the corresponding period last year. Faced with a combination of high production, shrinking profits, and weak domestic demand, Chinese steel mills were forced to export their excess steel at low prices to other countries. China's steel exports are expected to reach 90 million tons in 2023, significantly higher than the 74.73 million tons achieved in the first 10 months. This positive trend is expected to continue in 2024, with exports remaining at a relatively high level. China is expected to export more than 7.5 million tons of steel per month in December 23 and January 24. Another contributing factor to China's export success is the temporary withdrawal of Indian HRC offers from key markets like Southeast Asia and the Middle East. Now, let's have a look at global steel price trend. Steel prices are on the rise globally, with major steel producers like Bao Steel, Shagang Steel, Huafat, and Nippon Steel increasing prices for their upcoming shipments. This upward trend began in late November. In January to September 23, China's FOB HRC export offers averaged $606 per ton, while Japan was around $625 per ton, Russia $630 per ton. Indian mills outpriced from the market averaged $628 per ton in this period. However, the recent production cuts in China in response to the flat control policy and government measures is acting as a trigger for domestic prices in China, which are influencing global prices in cascading effect. The output drop means lesser domestic supply, which is pushing up domestic prices. Going forward, seaborne steel trade volumes for the remaining part of the calendar will depend mainly on which way the wind blows in China. If production cuts are implemented seriously in adherence to its flat control policy and domestic demand improves further on the basis of supportive policies, then perhaps China may lower export offers, which will pull down overall volumes. That's all I had to share from my side. Thank you.
Thanks, Sakina, for that brief presentation. Now it's time to hear the views from our esteemed panelists. A note for the audience that anyone who wishes to ask a question may please share them with us in the chat box below. We now begin with the panel discussion. We'll be dividing this panel discussion into 5 segments, which will be focusing on steel production, demand, exports, prices, and decarbonization. So beginning with the first segment of the discussion, which is on crude steel production. So my first question is to Mr. Lin Mao. Ms. Lin, we have been hearing that China's crude steel production in October fell to almost 10-month low. However, if we compare on Jan to October basis, the output was still higher by 1.4% year on year. So what is your view on the near-term outlook for this? Ms. Lin, you are on mute. Can you please unmute yourself?
Oh, sorry. Thanks for asking. I think I have to share some data sets under the service of MySteel. Actually, I think your data get from the national custom, right? That data shows that China's crude steel production reaches the lowest point of the year in October, right? And in fact, according to the latest data from CISA, the daily average crude steel in November was 2.5 million tons, which means that is the fifth consecutive month of decline since June. Okay, so however, that data surveyed by MySteel is slightly different, and the decline in output in November may not be so obvious. So according to the National Bureau of Statistics, from January to November, China's cumulative crude steel production was 938.9 million tons. That is an increase of 0.78% year on year, comparing with 2022, right? And this increase, this increase, according to MySteel survey, was around 4 to 5%, comparing with last year. So a bit higher than official data. So that means probably it costs different explanation on this data, right? But no matter what, the control of China's crude steel output in the second half of the year has achieved in some way, right? If you ask from a very short-term perspective, such as December, right? According to MySteel research, the production of construction steel in December might be significantly higher than that in November. So that is a kind of a definite data, right, that we can serve in short term. And as profit from that is the profit from electric ERC mills will be increased in this month, and factory production enthusiasm increase as well, which may have an impact on kind of negative impact on the price in December. And in terms of the flat products, in December and January next year, February next year will not be so high, but after March, the production of flat steel, include HRC, CRC, HDG, those kind of products might be increased start from next second quarter or maybe from March. So I think at least the first quarter of next year will be a relatively higher supply side. Well, looking at the whole year, according to our calculation, the China's crude steel production might slightly increase by 1 to 5 million tons in 2024. So if you compare it with the data from Statistics Bureau data, right? And the capacity utilization of EAF steel plants may increase comparing with 2023, as I said, and also it's highly related to construction steel, which also has a big market share, right? Also with medium and heavy plate and some electronic steel on all those kind of products will might be high possibility to increase. And production also in terms of the different province, please take a look at the whole the production in Hebei and Shandong and might be increased under their local regulation and tasks of next year. However, the impact of domestic carbon emission control may be stronger than this year. In this year, those influence, under the carbon emission, not very strong. There are some tasks, but enterprises, they don't, doing very well, I would say. So many provinces may be tasked with, ultra low emission transformation next year. So please take note. Thank you. That's my answer.
All right. Thank you. So just to sum up, we expect the China's crude steel output to remain on the higher side in 2024. And the flat steel output may remain low in initial months of Jan to March, but post-March, we increase the flat steel output in China to increase, is what you mentioned. And all right, then we move on to the next segment of our panel discussion, which is on steel demand. So this question is for Mr. Mahajan. Mr. Mahajan, we have been hearing that global long steel market has remained weak throughout this year, 2023. So what do you think, which are the factors that govern this, and what is your outlook for 2024 Q1?
Thanks, Nishta, and hi, everyone. Well, steel, as you know, is highly influenced by the GDP growth and the general economy. And this is more so for long products, which are driven primarily by construction. And construction, in turn, is driven by government spending. Now, this last year, we've had a lot of economic uncertainty. We've had high inflation numbers. We've had poor sentiment. We've had all this doomsday scenario that, market is going to crash and nothing is going to happen. We've also had political turmoil in a number of countries, at least in Asia. Thailand, we had a change of government. Indonesia is preparing for election. And then the other important thing was the dichotomy between India and the rest of, let's say, Asia for now, where the Indian market has been doing reasonably well, but the Asian markets have been very poor. So all this led to, a slowdown in the economy. Oil prices were very high as well. Sorry, that's another factor. With oil prices high, again, the economic uncertainty just builds up. So all this led to a period in this last year, which has been seen declining interest or very low demand. In the coming months in the next year going forward, there will be some changes after March. In the first quarter, I don't see so much difference. Long products will continue to be the way they are, which is primarily governed by local supply. So deformed bars, wire rods, even billets are all primarily being taken care of by local supply. And it's helped that mills have come up in the region, Vietnam, Indonesia, Malaysia, all have become big producers. And in fact, Vietnam and Indonesia have now become net exporters instead of importers. So in the first quarter of this next year, I don't see much change in this. The factors after that are, I think, a little bit more positive. For one, let's say a big market like Indonesia, if assuming election goes as per plan and, the current president, his son is standing for election, and they have a very ambitious project of the new capital. Now, if that new capital project really takes off, provided the election goes the way it is forecast to, then we'll see a huge spending in Indonesia domestic demand. and that is going to impact the rest of the Asian countries as well. Similarly, in Thailand, the government has just been formed and they are now passing the budgets. Once the budgets get approved in December, January, then again you'll see spending from February, March onwards. Singapore has anyway been putting a lot of emphasis on infrastructure, so that demand will continue. Vietnam is affected like China with the property crisis. If China is taking steps to address it, I think Vietnam will also follow. Vietnam has been badly impacted also by the whole economic uncertainty. They should also come out of it by the first quarter. So after the first quarter, I think things will be a little better. Primarily, the traded products in the region are billets. I mean, besides the long products, finished products, which are inter-regional trade, the large imports have been of billets, which were coming in from Russia, which were coming in from India. RINL used to have these tenders, and there was to be a lot of response to those. That has been replaced now by either local supply or by regional trade. So the Indonesian mills are exporting, the Vietnamese mills are exporting. The Philippines, which is a big market for billets, that was affected by economic uncertainty, but they also bought from Vietnam and from Indonesia. Sri Lanka started buying from these regional countries. So the lack of Russian material wasn't really felt, though the Russian material is still finding its way through Chinese traders and other ways of getting past the sanctions. On the sanctions are not on steel; they're only on the currency. So that way things are happening. Iran still manages to find ways to sell into the region, but the other previous big suppliers like India and most of Russia were out of the market for this past year in long products. And like I said, I'm expecting a market pickup after the first quarter next year, once there is a little bit of stability and the economy shows a little bit of strength again. And oil prices are also on the decline. We hope that the Russia-Ukraine war, which was a big factor last year, it was still fresh on everybody's mind, has reached a stage where they call it fatigue. Now everyone knows that is there. It's not something to be, it's just something to be factored in your background. It's not something which is terribly impacting you right away, like it was in the early days. So all that means that there should be some stability and growth in following quarter one. Thanks.
Thank you, sir. Yeah. So, sir, just a follow-up question on your remarks. How do you see things in Hong Kong? Because that has also been active in importing rebars. So, what's your outlook on the Hong Kong market especially for rebar imports?
Well, Hong Kong, I think Lynn is better placed to answer this question. But frankly, Hong Kong is it's basically following the Chinese lead, right? So they are now trying to develop low-cost housing, and some of the islands which are uninhabited, they're trying to develop and grow that. They are going to invest a lot in Hong Kong because they're also, Hong Kong has suffered reputation-wise in the last couple of years. Right or wrong is a different matter, but there has been a move away from Hong Kong to other centers for a lot of international businesses. And I think China does want to attract them back. Plus, China would like to showcase Hong Kong as, a thriving economy. So there will be investment in Hong Kong. I expect, again, similar to what I said earlier, once the Chinese demand picks up, property matters are issued, Hong Kong will also go along with it.
All right. My next question is to Ms. Lynn. I think Sakina wants to ask that question about the sector-wise demand. So over to you, Sakina.
Ms. Lynn, could you elaborate on sector-wise steel demand in China and factors which are driving it in 2024?
Also the demand, right? So according to our calculation, so China's total crude steel consumption in 2022 will be 964 million tons, of which real estate consumption will be 300. I remember 320 or 325. That accounts for 33, and this is followed by infrastructure, accounting for 74%, and then automobile and machinery, and they were 7% and 14 to 16 respectively. While construction still account for 10.5, right? And white goods account for another 5%, and then the shipbuilding and some energy project. Well, China's overall steel consumption in 2023 in our calculation will fall by 2.2% compared with 2022. And this is a relatively pessimistic data, indicating that China's steel demand has entered a downward trend for sure. So, because it's the third year of the downward, right? In last 30 or 40, even 50 years. So this might mainly due to the significant reduction in real estate demand. In 2022, China's real estate demand was approximately 300 million tons, a year-on-year decrease of 5.7 or no, like 5.8. At the same time, infrastructure demand increased by another 5 to 6% on year to around 170 to 180 million tons. As becoming the construction, industry. That means the construction industry is very important to support for our steel demand. In addition, the automobile industry, home appliance, shipbuilding, and energy, steel, all these manufacturing are all showing growth. But the demand for steel in machinery, this increase in general, the demand for steel in infrastructure and other manufacturing industry even is rising, but as the real estate account for more than 30%, the decline in demand also leads to China's overall steel consumption drop in 2023. And we believe that the downtrend in the real estate demand is not over at all, and it may hit a lowest point in our opinion in the third quarter of 2023. This figure is based on the new project that released by our official data. So this the full year demand is expected to fall by 1.7 to 2% year on year. That is on Masters calculation, right? Which is in line with the expectation of many, market participants. I would like to say most people in this market, they expected the real estate demand will keep going down next year, at least until the third quarter of the fourth quarter. So, however, in terms of infrastructure, many people believe that the support of the infrastructure is not very good, will not be very good next year, just like this year. But I still believe that this sector will continue, and this trend will be continuing in 2024, because we can see government, put a lot of money ever in these sectors, and there are enterprises and some national-owned, enterprises. They are quite, put a lot of people, energy, and fund credit on this project. So I still believe this trend will be continuing in 2024, and the increasing demand for steel may reach more than like 5% year on year. I mean, the infrastructure. In addition, we are optimistic about energy, steel, shipbuilding industry, and home appliance in 2024. So we expected that the steel demand growth will generate to around, especially for the energy industry, right, 9% to 10%. And for home appliance and shipbuilding will be increased at least 3 to 5%. So overall, it is expected that China's actual crude steel consumption will increase slightly by about 19 million tons, 18 to 19 million tons in 2024. That is around 2%. So in terms of the GDP generated by it, it will be increased about like 4 to 5%. That is the study from my field.
Well, if I can just interrupt for a minute, Nishtha, this construction industry is key everywhere in China as well as in Southeast Asia. So, and this is primarily driven by government spending. Now, if, as I expect, that these ASEAN countries will increase their spending in the next year after the first quarter, and China construction doesn't pick up, it means that Chinese exports will rise. because there will be a demand in Southeast Asia and China will need to export. So this will lead to, China may be exporting, besides the long products, even the billets, which have been absent from the market for a long time, Chinese, they will probably come back in the market.
Probably more billet instead of construction steel.
Yeah.
So, sir, you have partly answered my next question. The next segment that we had was on steel exports. So, my next question to Mr. Mahajan is that steel exports from Russia and Ukraine have been falling post-war. And you already mentioned in your opening remarks that we have seen a replacement of these volumes from countries like Vietnam and Indonesia. So, do you see things in the similar manner in 2024 as well?
Yes, to some extent. In general, the steel trade has become regional. Even the trend was there earlier also, but it's becoming much more regional now. The Russian impact was both good and bad. In fact, for the Indian steel industry, it was positive in the first few months of the year when the Russian supply to Europe stopped and India got unfettered access to that market. And that's why the Indian exports to Europe really shot up in the first part of the year. Then there was a lull in Europe, export, and Indian market was doing well, exports dropped off. In the last couple of months, again, it has started to pick up, but I don't think this pickup will last very long for the moment, because Europe is still struggling economically. I mean, there's been some buying for inventory build-up post the August holidays. But again, now with holiday season coming, winter coming, we don't know which way oil prices will go. I see a slowdown to some extent in January, February again. And then after that, the trend of this year will continue. I don't see Russia or Ukraine coming back very soon in any case in the market. And even if the war stops, I don't think there's enough steel for them to export. Then the demand will be all local for them. There is so much work to be done in reconstruction and all that if the war stops. If the war doesn't stop, then we carry on like we're doing here. What we could see is, the Chinese, their exports have gone up a lot to Europe. I think they've, of the import of Europe, Chinese, which had dropped to, single digit figure, are no more than, I think, almost 20% of Europe's imports are coming from China, replacing a lot of the Russian and part of the Indian, which stopped. So I think what next will be for China will be to work with EU on the trade barriers. There are still trade barriers for Chinese steel into Europe, and those were erected because they had alternate sources. Europe had alternate sources. Now that alternate sources are drying up, maybe they will relook at the barriers that they imposed on China. If that happens, it will be very good for Chinese exports. Indian exports are again going to be seesaw. The domestic demand in India, I think, is expected to be strong. The optimism which is in India is not there in the rest of the world. Even today, the Indian hot rolled coil prices, I don't know what he was saying, 700 region. The last Chinese exports have been at 570, 580 FOB. Now they're asking for higher, but the actual exports which are taking at 570, 580 FOB, going to Turkey, going to Europe. And so there's a huge gap to bridge there between India and China and the rest of the world. Indian exports will pick up only if it's a conscious decision that we want to keep our market. It'll be a lower price, but we still want to do it. The other thing that I'm seeing today is that mills are pretty open to cutting production quickly. It used to be in the past that production used to be, everyone focused on tonnage. We have produced so much. Now it's become a matter of price. If the price doesn't work, we reduce the production. And input costs are going up. Inflation is affecting the input costs as well, from raw materials to fuel to everything else. And therefore, mills are saying, if this price doesn't work for us, too bad. We just want to export. We'll reduce the volumes. And so that is going to lead to, which I think will keep the prices relatively high or stable. Demand will be down, volumes will be down, but prices will remain up. So that's what's going to happen, in my view, in the coming year.
Ms. Lin, as we saw, Chinese steel exports are likely to hit 7-year high in CY23. So, will steel exports stay strong in CY24 as well? And is value-added steel exports gaining momentum currently?
Yes, it's kind of embarrassing. China exported such a lot steel products this year. Yeah, from January to November, which is the very updated data, China exported a total of 82 million tons of finished steel products. That is a year-on-year increase of 35%. and at the same time, we exported around maybe for the whole year, 3 million tons of steel billet. That means that this year, including semi-finished products, might exceed 90 million tons. So basically returning to the level of 2016, the historical high period. The export of high value added products have increased, with flat product export account for 70% higher than all the time in the past. But most of them are still kind of carbon steel, and the share of the high value added exports not increased, I would say. So simply put, the reason for the substantial increase in export volume is due to the decline in domestic demand and untimely production reduction, and the sharp depreciation of RMB throughout the year also is one of the main reasons. So most of the increase in exports concentrated in Southeast Asia, Central Asia, like Middle East, and some other
Latin
regions.
America.
But to our traditional destination like South Korea have an increase, and export to Western developed countries like America not increase at all. So I really don't think steel export will maintain this level in 2024. So first of all, from the perspective of China's own supply and demand structure, a large scale exports of flat steel kind of unhealthy, and they often fall into a abnormal competition, and the entire industry and all the participants does not obtain reasonable profit from it, and it also cause increase in trade, some trade barriers cases, right, rising this year. So this has attracted the attention of government and the industry, some organizations, and they will try to solve this kind of embarrassing situation. And I believe it will accelerate the optimization of domestic industrial structure, and first, at least ensuring the reasonable operation of the supply side, right? And in addition, the depreciation of RMB exchange RMB stretching against the US dollar in 2023, I think mostly due to the continued tightening of US dollar under their policy, also impact an important factor in supporting export orders, and this factor may not continue play a role in 2024. So from the perspective of overseas demand, we also believe that in addition to the stable increase of in emergency economy, there is a limited room for further release of overall overseas demand. Since, as we already know, since October this year, export orders have begun to weaken significantly. That means the shipment from January and February will not be very good, like November, December. But we can at least expect that steel export will decline like month on month in December and January. But like in this 1 to 2 or 3 weekends, some orders are getting better now, especially like today, the pricing keeps going up, and people all wait and see. So even, but I think most of the steel mills, they are very active to export and to pay a lot of attention on export market. So maybe from March, they will need to back to the export side. So I can't say how export will going on, but for the whole year under our current policy, 2024, I really don't think the the export volume will keep like this level, maybe down like 10 to 20 million tons year on year. Yeah, that is our expectation.
If I can, Nishta, again, if I may just say a couple of comments, since you mentioned value-added steel in China. Chinese steel quality is very good, no doubt. But the value-added steel is being focused on by a few key mills, Bao Steel, Shagang, because what happens in this value-added steel is that the standards and certifications are very important. And Chinese mills, the except the few very big ones, they've been reluctant to invest in getting the standards approved. So BIS example for India, only a couple of mills have got that standard. If they had the standard, they would be able to sell much more into India. Similarly, I'm doing some work in USA and Canada, where they want the Canadian standard or the Australian standard or the American standard, and the Chinese will say, no, we will give only our Chinese standard. It's equivalent to yours, more or less. Properties are the same, but we can't certify to your standard. Now that creates a barrier for doing value-added steel. So I just wanted to mention that as one point. Another is this, daily market rising. Today's market is very strong. These all relate to the screen trading, right? And I think there is also a further dichotomy between the screen trading and the real trading, physical trading on the ground. So the screen trading is done by people hedging and taking positions and making money on this, whereas the actual buyer is confused because he cannot buy at the level shown on the screen. So, but the mills keep asking, you can see this price and you must pay this price. So that in fact leads to, further complications in the market. And I don't think it's a sign of real demand going up, the screen trading. It's a dichotomy between the physical and the screen. So I just wanted to mention these things.
Right. Thank you, sir. And of course, as Ms. Lin mentioned, and you also added up, so Chinese steel exports again since 2016, it seems to be on the higher side in 2023. And of course, flat steel exports have risen. But yes, again, the specifications and all these, I would say the challenges that lies ahead because of the different specifications and all these things that have been laid down by specific countries for imports for Chinese material. So definitely that are some of the governing factors. With that, we now come on to the last section of our panel discussion, which is the most critical one, I would say, outlook on the prices. So again, asking Lin, first of all, that how do you see the Chinese steel prices performing in the first quarter of 2024? And as you mentioned that output for construction steel, probably may remain high, but again, flat steel output may remain slow in quarter 1. So how do you see prices moving in quarter 1?
Regardless of overseas factors, I think steel price or maybe our team think the steel price in first quarter of 2024 will remain upward from January to February, but after March, I think it will reach to the top and probably enter into a long period decrease. So basically, it's not a very positive forecast. Just like the previous mentioned, China's production and consumption, we believe that real estate demand will, which accounts for more than 30% of China's steel demand, will bottom out in the third quarter or fourth quarter next year. But because there are really not many new projects, at this moment you can see, and no many investor, get the land, buy the land to invest either real estate or commercial house like that. So secondly, at least in the first quarter, rebar production may not drop significantly and will mostly likely remain stable or up a little bit. And the flat production may increase slightly in the fourth quarter, because there are some new projects that will put into operation. So, and not many, mills tell us, they're gonna cut or something. So therefore, from the perspective of supply and demand fundamental, there is a downward pressure on the steel price. Well, however, from macro level, we believe that monetary policy might be loose in 2024. More money will probably put into the markets So that the whole market is currently waiting for the Central Economic Work Conference. It might be next week. So the government will may convene recently, and we believe that there will be a clear instruction will be released in this conference. And if the loose monetary policy will be implemented as my few aspects, then there may be some room for improvement in steel price, at least in RMB price. And everyone, may pay attention to the development of the conference. So there are some, support, also some pressure, but I would say the price anyway. In any way, the steel mills they probably have much more pressure on their profit. That's for sure. Next quarter, maybe the price will up or down. I can't give a a very definite forecast, but it will not be a good period for the steel mills. They might be lost. Yeah, at this moment, the blast furnace steel mill is still losing, but the EAF mill, they have a margin profit like 200 RMB, like $30 per ton, still have profit. But the BF steel mills, even especially when they're producing rebar, they are losing, still losing at this moment. So probably all the profit will keep going down another level for next quarter. Yeah, that is my forecast.
Just a follow-up question on your comments. Do you see the import demand for high-grade ore, especially high-grade iron ore or pellets, to remain supported in China in the near term, maybe Q1, or the Chinese steel mills are seen preferring low-grade ore?
No, no. The import demand for the first quarter, you mean the demand of steel bellied semi-finished products? Is that you mean? Well, no.
Iron ore pellets. He's talking about iron ore pellets.
Iron. Oh, iron. Well, yes, iron. Yes. And this year we imported over 60 million tons of iron last year. At the same time, we exported 20 million tons of finished steel than last year, right? So it's really not good. But in next quarter, I think the import, there are demands for steel mills. They were more active on production. So I think they will increase their raw materials purchase.
Okay, so do you think that in order to match up for the raw material cost, the steel mills in China will prefer going for low grade or medium grade iron ore than preferring for high grade iron ore or pellets? There
is a talk like that, but
okay.
We don't have such a calculation or assessment. We just talk with those steel mills. They tell us a story, and they I don't really know the reason, but but I know they are increasing demand for those kind of low grade products. They try to explore some new areas, new regional sources, from other countries instead of like Australia or Brazil, like that.
Yeah, Mr. Mahajan,
Yeah, just a couple of things I wanted to add. One is on this low-grade iron ore. I mean, yes, it reduces the cost, but it also increases the pollution. So, obviously you're taking out more waste material from the iron ore if you've got lower grade iron ore. So that increases the pollution, and then with the CBAM all coming up, so that's got other implications as well. So it's not just simply the cost which affects low-grade iron ore. The other thing I just wanted to also mention was on the interest rates. The steel market is still driven a lot by sentiment. If the interest rates start falling, I think we will see a spurt in investment, and that gives rise to a little bit of a spurt in sentiment. And so if the interest rates do start dropping in the first quarter of next year, I think that will be positive for prices. If interest rates remain the same or their lull is there, then it's going to be, as we call it, range bound, plus minus $20. It's going to be in that range. The other unknown factor is the Russian-Ukraine war. If that comes to an end, then we'll see again a spurt in demand and a spurt in prices. If that continues the way it is, you can call it a stalemate, you can call it up and down, it happens, but nothing changes there, then we'll continue to see this kind of uncertainty. And nobody has a final crystal ball to give an exact number, but I expect it to be range bound.
Right. Thank you so much, sir, for those additional comments. Well, I think it's now time to wrap up this panel discussion and this entire session. I'm sure I could note down quite amount of key takeaways from this, and I'm sure the audience could have also been able to note down. And some of the key takeaways that I would like to sum up here is China, again, crude steel production likely to remain on the higher side in 2024 as well. Prices may be driven by quite a lot of factors, be it production, be it Chinese steel exports that are seen increasing quite a considerable hike this year. Chinese steel exports in almost hitting 7 years high, and 2024 will again be an interesting year to watch out for. Mr. Mahajan talked about how the supplies from Russia and Ukraine are being replaced by the other countries like Indonesia, Vietnam, which have been actively exporting this year. And of course, the inflation, energy, and the geopolitical concerns and all these factors are the one that we need to look out for the coming year in 2024. So yeah, thank you so much, both the panelists, for joining us in this session. We have the next Engage session coming in today at 12:30 in the afternoon, which is on the rising steel demand to boost India's manganese ore and alloys consumption, Outlook 2030. Thank you so much, Mr. Mahajan. Thank you, Ms. Lin,
Thank you,
for
Nishtha.
joining us. Thanks, Sakina, for co-hosting this webinar with me. A very big thank you to the audience, and goodbye.
Thanks, Sakina. Thanks, Lynn.
everyone.
Thanks, Nishtha. Bye-bye.
Bye.